Have you ever wondered why gold prices are soaring recently? Well, let's dive into the current state of this precious metals market. The story of gold this week starts with a rise. On Monday morning, the golden commodity was trading higher, and this was after an impressive jump of nearly 5% in the last week alone. Now, the crescendo of this golden symphony was on Friday, when prices hit fresh highs. We saw the price of gold leap to trade just shy of $2,200 per ounce, a significant milestone indeed, but what's even more fascinating is that this didn't stop there. Gold continued its upward march, setting a high nominal value in 4 consecutive sessions. So what's driving this golden rally? Well, expectations play a big part in this tale. The market is buzzing with anticipation that the Federal Reserve, or the Fed as it's more commonly known, will cut interest rates this year. This anticipation has fueled the surge in gold prices. To give you a sense of the market's bullish sentiment, let's look at some data. The latest report from the Commodity Futures Trading Commission, or CFTC, reveals that speculators have increased COMEX gold futures for the 3rd week in a row. This is the largest weekly increase since early June 2019, leaving a whopping 131,060 contracts open since last Tuesday. Now, amidst all this, the demand for gold as a safe haven continues to be supportive. Geopolitical uncertainty, ongoing wars, and the upcoming elections in the USA are all factors contributing to this demand. As a result, we're seeing a forecast for higher gold prices this year, with 4th quarter prices expected to average around $2,150 per ounce. But, hold on to your hats because there's a twist in the tale. The market awaits the inflation data to be published today, which could give more clues about the USA's monetary policy. This could potentially sway the gold prices even further. So, it's evident that the gold market is experiencing a significant upswing, but what's driving this trend? Stay tuned as we delve deeper into the reasons behind the rise in the next scene. Let's dive into the reasons behind this impressive rise in gold prices. The world is a complex place, and gold, like any other commodity, doesn't exist in a vacuum. Its price is influenced by a myriad of factors, some of which we can predict, others we can't. Let's look at some of the key drivers of this recent gold surge. Perhaps the most significant factor is geopolitical uncertainty. With ongoing wars and the upcoming elections in the USA, investors are understandably nervous. Gold historically has been a safe haven asset. When the world seems unstable, investors tend to flock to gold, driving up demand and in turn prices. But it's not just global events driving this trend. Speculators have played a significant role too. The latest CFTC data shows that speculators increased COMEX gold futures by 63,018, the largest weekly increase since June 4, 2019. This marks the 3rd week in a row that we've seen such an increase, bringing the total to 131,060 since last Tuesday. This is the highest level of bullish interventions we've seen since the week ending January 2, 2024. These speculators are betting that gold will continue to rise, and their actions are, in part, creating a self-fulfilling prophecy. As they buy up futures contracts, they're increasing demand and pushing prices higher. Another factor to consider is the expectation of interest rate cuts by the Federal Reserve. When interest rates are low, the opportunity cost of holding non-interest-bearing assets like gold decreases. This makes gold more attractive to investors, further driving up demand and prices. Finally, we can't ignore the role of the US dollar. Gold and the dollar have an inverse relationship. When the dollar weakens, gold becomes cheaper for investors holding other currencies, increasing its appeal and, you guessed it, driving up prices. Many analysts are predicting that the Fed will start cutting interest rates in June, which could weaken the dollar and provide yet another boost to gold prices. But here's the catch. With such a significant increase in open interests in such a short time, caution is warranted. The market is extremely overbought. A lot of this money is hot, meaning it could quickly flow out again if expectations aren't met. If the CPI value, which is due to be published today, is bearish for gold, we could see a significant sell-off. However, if it's bullish, the rally could be delayed as the hot money sells off, waiting for new buyers to step in. Thus, various factors are pushing gold prices higher. But how does this impact the market? The rise in gold prices certainly has a profound impact on the market, but it also leads to some speculation. The sudden surge in futures contracts is a key indicator of this trend. Just in the first week of March 2024, the number of futures contracts rose to over 120,000, marking the largest change we've ever seen. This unusual activity didn't just materialize out of thin air though. there are whispers of a mysterious buyer, someone who made substantial purchases following the completion of the Leviathan order. The identity of this buyer remains unknown, but there are suggestions that it could be a central bank, perhaps even one from the BRICS organization. The market is currently teetering on the edge of being overbought. Much of the buying activity came in a sudden wave, likely following the accumulation carried out in February. This suggests that a lot of the money that came in, especially towards the end of the week, was based on the expectation of a break in the Consumer Price Index, or CPI, and an anticipated easing by the Federal Reserve. However, this hot money, as we call it, can be fickle. If the expected changes don't materialize, the money can move out as quickly as it came in. This is why we need to be cautious. A lot of this money was invested when the value was near its peak, which means that the tolerance for loss will be low. The CPI plays a crucial role here. If the CPI value is bearish for gold, we might see more selling than usual. On the other hand, if it's bullish, expect a delay in the rally as the hot money sells off, waiting for new buyers to jump in. While this speculation adds a certain level of intrigue, it's crucial to remember the potential risks and rewards tied to this market trend. So, with all these factors at play, what can we expect for the future of gold prices? As we gaze into the crystal ball of economic speculation, we see a shimmering future for gold. Our forecast for 2024 has been updated to reflect this golden gleam with an expected fourth-quarter average price of $2,150 per ounce. This is not a whimsical prediction but rather a calculated estimation based on current market trends and economic indicators. A significant factor in this prediction is the expectation of the Federal Reserve cutting interest rates. As the Fed lowers rates, gold becomes a more attractive investment option, often leading to an increase in its price. We're also eagerly awaiting the release of inflation data. This information is crucial, as it provides valuable insights into the health of the economy and the potential direction of monetary policy. Now, let's address the golden elephant in the room. Could the market reach new highs? The answer is a resounding yes. It's not only possible, but highly probable. We are witnessing an unprecedented increase in futures contracts, with numbers soaring above 120,000 in just 1 week early in March 2024. This dramatic uptick suggests a bullish sentiment among investors and speculators, and a potential surge in gold prices. However, as with any market prediction, there's an element of uncertainty. Despite the bullish indicators, there's still the possibility of a bearish turn, especially if the inflation data doesn't meet expectations. Therefore, caution is advised. Remember, the market is like a roller coaster. It can take you to dizzying heights but also plunge you into sudden depths. One thing is certain though, the market is watching gold closely. A price of $2,200 per ounce is not just a dream, but a potential reality. Whether this milestone is achieved today, next week, or next month is anyone's guess. Whether or not gold hits $2,200 per ounce today, it's clear that this precious metal continues to hold significant value in our global economy. So, what have we learned from this discussion on gold prices? We've seen that gold prices have hit new highs, with the price per ounce nearing an impressive $2,200. This rise, which is almost 5% in just the last week, has been fueled by expectations of the Federal Reserve cutting interest rates this year. Speculators have played a significant role in this surge, with a record increase in COMEX gold futures reported. This bullish intervention is the highest since the start of the year. The market is currently in a state of flux, with geopolitical uncertainties and the upcoming US elections contributing to the demand for gold as a safe haven. Looking ahead, we anticipate gold prices will continue to trade higher this year. Our updated forecast for the fourth quarter of 2024 expects an average of $2,150 per ounce. While gold prices may fluctuate, one thing remains certain: understanding these trends can provide valuable insights for investors and beyond.